Good morning, Matthew Mickey here, and I will be doing my wargaming for December 9th, Tuesday. All right, so let's start on this chart. Like we cannot close outside of NFP Fridays, right? Yesterday, and it looks like we're heading to the back end, so everything's on pause when it comes to the 70-30 green days versus red days. So now let's go into candle science and do that portion of it. Right, so we know that Friday was green and yesterday was red. Right? So we're just going to come over here and put green for Friday, red for yesterday. We know that yesterday could not get above previous day high, but it got below previous day low. So we have that selected. And we know that we closed above the open. So our probabilities as it stands right now is a 60% probability of getting above previous day high or a 52% probability of getting below previous day low. So there's not that big of a difference. It could go either way. Right, so we're going to put that in there. So we know that this is 54% get below, and we know that this is 60%. All right. Now we know that if we want to see if we lose this opening price, how that messes with the statistics. So if we lose previous day opening price, and obviously like this high will get more probabilities than the low, right? So if we say we make it above the opening, previous day opening price, we can see that high gets 78% and that low loses like 12, 13%, right? So we know that's the anchor point, and then previous day mid as well as the anchor point. So now we can get targets. So let's say if we want to take this previous day low, right? How far low do we expect it to go, right? Right, we can see that the CT low represents previous day low, and we can drag the 30th percentile. We can see first and foremost, there's not a lot of times that we've had this scenario, right? But we can say between 0.29 off of that low. So we grab our measurement tool. We're going to go 0.29. And we know that 30% of the time, 30th, this is the 30th percentile, meaning 30% of all data has reversed before hitting this line. Right now, we're going to get the median, right, which is 0.42, right here where it says 0.42. And we'll draw that out because this is realistic targeting. So right there. And then we'll get to the set. And so we know that 50% of the data out of this candle's probability has reversed before hitting this line right here. Now we're going to do the 70th percentile, knowing that 70% of the data has reversed. So anything beyond this is just anomaly. Right? And we can see that that box is the third blue box down. And that's around 0.53. So we know that this is the lower probability anyway, but we still have to account for it. And we're going to do the same thing because we have equal weight of probabilities with the previous day high. All right, so X out of that, click right here. And then same thing, right? This yellow line right here represents the previous day high. And we can see that the 30th percentile is 0.17 and 0.18. 50 percentile, 0.31 to 0.40. and then the 70th percentile reversal zone is at 0.41. So now we have good realistic targets for once we break either the high or the low, and we just are aware that both are like 50-50. Right, coming over to the weekly, locking in weekly highs and lows, we can see that there's still an 86% probability on the weekly chart, which is right here. Right, we're below Sunday, so we can anticipate for that to get hit. Right, looking at the whole last year's worth of highs and lows and when they came in, right, we can see that so far, if this is going to be the high of the week, it's going to be a shallow MAE to MFE. And is that reasonable to think? Right, we can see that the median of putting the weekly high or low before distribution is on Tuesday at 2100, but we do have data to support that. And we are rejecting that Sunday 1800 price, which is this green line right here. So once we get below Tuesday 9:30 to 10:30, because we use Sunday 18 to 19:30 and Tuesday 9:30 to 10:30, we can lock that in, and then or are we going to come down here, bounce, and then make a new high a week? Right? That's still unclear. Looking at overnight was pretty trending down. So we had Asia sell off, London sell off, and we're going to see, right, what the probabilities of this Asia OU, this London OU are, P12 low right here, previous day low right here. We know right out the gate, breaking out of 730 to 830 box, that this is the 30th percentile, the 50th percentile, and the 70th percentile of after we break out two targets. So that places us below previous day low with a possible reversal. Now let's go look at data and see if that supports it. Right, so coming over the daily profile, we know that we had a long false, and I don't believe it was broken. It was broken, so we can't use Asia as a target anymore. And then we have short true for London, and we went short for New York 1 out of the 730 to 830 box. Right, we can see just right out the gate, there's a 69 versus 30% probability of false versus true. Right, so we're going to select false to see that one. We can see that this London OU to the upside has an 87% probability of being broken, and we have plenty. We have the mode and the median between 9:30 and 9:45, and then it goes to like 10:15, 10 o'clock hour, right? So this London OU right here is a high probability hit, right, in this condition. Now we will wait for the 4-step reversal. And so, like, that means, like, we either reject right here in the 12-hour footprint, we reject in the previous day footprint, which is the wick, or we swipe them and then go, right? So data points us around this previous day low before we make that reversal, right? So that's what we're looking for. Now, right, let's talk about how do we know to buy the reversal, right? We do a 4-step reversal, right? This will represent 9:30 price, the 1 minute. Right, let's say 9:30 sells off, or if it blasts forward, either way. Step 1, can we get above 9:30? Step 2, this is gonna represent the 9 o'clock hour, right? Step 2, can we get above 9 o'clock's 50%? Step 3, can 10 o'clock take out 9 o'clock low? And step 4, make an instat high, instat low for the 10 o'clock hour. Now that's just to make sure that we're not fighting momentum, right? It doesn't mean that you can't start position sizing down here off of a sweep or whatever your entry criteria is. It's just that's when you truly lock in that low of the day or that major pivot between 9:30 and 10, right? So you can capture it and utilize it for the rest of the day, right? So until we see that 4-step reversal, we know that all trades are fighting all this momentum right here, right? So that's how we'll identify the true versus the false. Now let's go through and put our distributions and our high day, low day zones on, right? So we see that Asia underspent and London barely spent. So we know we're back in a normal range in market where volatility is not expanding, but it's contracting, right? So we know that we're going to put New York 1 range on, and we know that overnight we put in 128 handles. And then we can spend, if we just sell off right here for New York 1 short true, we can get to this level right here. Right, that lines up with this average MFE right here, right? Or are we going to bounce off a P12 low? Then we can know that we can take out in New York 1's distro that is calculated over the quarter, that we can have the possibility of wiping P12 high and low all within by 11:30, right? Or do we need to swipe P12 previous day low, et cetera, right? All right, so moving on. All right, let's do a high day, low day. Right, we know that the highest probable structure for the short falls is the range between 9 and 9:30, and then the spike down and start trending back up. Right, we know from a high day, low day, the highest probability is to make the low of the day between 9:30 and 9:45, end of day, high day. Right, we can see 0.7 to 0.8 is our low of the day distribution, so let's go put that in. 0.7, 0.8, 9:30 to 10:30. And we can see that that just lines up with, you know, the low previous day low in this breakout MFE. Like, so a lot of things is pointing that we could possibly start taking reversals around here. Right? Now let's go put our higher day information in for that one. We can expect it during power hour and to go from 0.4 to 0.6. And then the end of the day, right? From a distribution standpoint, can we, on a 10-day median range, make it from high day, low day? And we can see that our 10-day median range is 292. So yeah, it's definitely realistic targeting to expect low day to high day, right? Unless we just have a contracting range because FOMC is tomorrow and we decide to range one all day, right? Now let's look at the other side of the coin because we broke out of the 730 to 830 box. We just went over, right? Price either bouncing off of the P12 low, right? The previous day low, towards the low of the day zone. Now let's look at the other side of the coin where we just have continuation, right? What that looks like. Well, we know from candle science that we already did. Number one, we had this probability level at the 50, and number two, that would be the distribution for that for a short true, because this other side of the coin is by 11:30 we can't make it back above this high, and we just sell off, right? So let's look at the high day, low days information for that. We know the upside probability. Number one, we won't get that 4-step reversal that I talked about, and number two, all those probabilities of the upside are getting dismissed by live price, and the market doesn't care about them, right? We can see that for that, we have a good high of the day right now, right? Our current high of the day is 2000 at 0.06, right? We can see that this says the highest probable mode is 2000. And then looking at this, right, 0.1, it can even make it to 0.1. We can see that from a statistical probability, we should be selling off and then starting the range after 10:30, right? And then we can expect from a 1.3 to 1.56 to the downside. So let's put that 1.3 to 1.6 the low of the day, and then from a time perspective, we can expect it either to happen in the morning between 10:15 and 10:30, and then we range the rest of the day, or end of day. So we're going to do 10:15 to 1600, just knowing that that's what we're aware of. Right, and then we know that this was the instat high that we currently have, 2000 to 2100 hour, right? One thing that supports this case of a short true of not being able to make it back above the 730 to 830 range is that we know, and we look at the last quarter's data, right? Falses have happened 60% of the time versus true, which is 40. We know that the false streak has been on a 6-day streak, and we're currently on a 3-day false streak. So we're on day 4 right now. So we are getting to the point where we're hitting the extremes of false days in a row, which would support this true. So with that being said, my trade plan is to look to see if we get the DWP or the DMP to the downside, right? That would support a short true. Or do we get the four-step reversal that would support a DWP to the upside or a possible range one? And then you trade off of that. So hopefully this helped. Later, haters.